Good morning, ladies and gentlemen. A very warm welcome to you on Market Today Television. I'm your host, Shail Bhatnagar, joining you from New Delhi. It's a very nice weather out there, and it seems it's changing in the same direction on Dalal Street as well. We are looking forward to not only the weekly expiry of the Nifty today, but lots of positivities that are coming in from all sorts of places. So first things first, the GIFT Nifty is pointing to a modest but strong upstart of about 130 140 points. That's to be looked forward to, and a lot of things have improved dramatically for the markets. Let's start with the Nifty as usual. What you see as yesterday's close was about 23,215. This is the third straight day of higher highs and higher lows in the market after a very serious bout of selling pressure that has seen the Nifty fall to a 6-month low. So at this level, there is some sensible buying happening in front lines such as Reliance Industries, but let's for a moment analyze each positivity as it comes. This is a rare day after many weeks, several months, that you have so much of positivity coming into the markets. First things first, you have a strong cues coming in from Wall Street. Dow Jones, Nasdaq, as well as the S&P 500 ended with strong gains because investment banks such as JP Morgan, Citigroup, Wells Fargo, and of course Goldman Sachs reported a very strong quarterly performance. Apart from that, the inflation number that the market was getting worried about on Wall Street has also come down substantially. So there is positivity coming in from Wall Street. Now with with Mr. Donald Trump assuming charge on Jan 20th, what is also happening is that there is a slight sell-off on the US 10-year yield, which fell dramatically yesterday. Remember, this is the most troubling point for Indian markets. It had peaked at about 4.8%, which was the highest in many months. It slipped substantially down about 2.94% yesterday to about 4.653. This is a very big positive for Indian markets, and this is likely to ease further till Jan 20th. So the decline has begun, or hopefully it has begun. The dollar index is down for the fourth day in a row, which is again a positive. Remember, the dollar index had peaked at about 110, which was the highest since November of 2022. A weak dollar is also good for emerging markets, and the fact that it will also help our currency, which is at a record low, the rupee, and therefore you might see some easing of FII numbers. That's the third positive that we are facing. Now let's look at some other good things that have come in. So rupee is likely to ease. It might bounce off a record low. We have a very oversold market in India over the last so many days and weeks, and because it's the weekly expiry, because the cues are positive, you will see a very nice bounce in at least the early morning trade. Will that bounce last? I'm hopeful it will, but let's hope that you don't see fresh shorts coming in. So for the moment, we are looking at a nice bounce in early trade, thanks to strong overseas cues, thanks to other markets also being benign, and the fact that you have three major earnings to look forward to. Remember, Reliance for the last 1 week or so has been providing a anchor's position on Nifty. That is an extreme importance. Axis Bank and Infosys will also report their third quarter earnings. Now, when it's good news, it gets better and better. The pain that overseas research firm Hindenburg caused on the Adani group of stocks seems to have eased over the last two trading sessions. Remember, we have been continuously marking Adani Power right from day before yesterday morning. Now the good news. It seems that Hindenburg is shutting shop, and that's an extremely positive development for very beaten down counters in the Adani group. So these are the positivities that I am looking at for today. Now there is just one negativity that I can think of, which is that crude oil prices haven't eased. They are around $80, $81 a barrel. But the good news is that the crisis and the war between Israel and Hamas might be in the final stages. And around Jan 20th, when Mr. Donald Trump takes charge, there is some kind of hope that there will be a swap of hostages. Hamas will release some in exchange of prisoners that Israel will release, and there might be some peace or temporary peace coming in Middle East. That will also have a salutary impact on risk on trade. So these are the positives that I'm looking at. There are many today. Let me repeat. Strong cues coming in from Wall Street. US 10-year bond yield eases. Dollar index eases. Very strong numbers coming in from the investment banks at Wall Street. Inflation data is less. We are on the weekly expiry of the Nifty. There is a very strong chance of mean reversion. Gift Nifty is showing a nice bounce. And the only thing, ladies and gentlemen, that is a bit elevated is crude oil prices. But then we benefit on ONGC in all India. This is what I am looking forward to today. Let's hope this is turning out to be a good day. But the other thing that I'd like to mention is, of course, the fact that this could be a dead cat bounce, which means that you see Nifty rising sharply over the next 1 or 2 days, and then selling pressure emanating again. But we'll deal with it when it comes. For the moment, it is likely that you will see positive developments coming in. We also have breaking news from our reporter Chetan Bhutani, who covers industries and ministries, and this is for sugarcane farmers. The Union Cabinet is likely to approve the hike in ethanol prices today, and there is a cabinet meeting at 10:30 a.m. We'll try to get Chetan on phone, but there is a price hike on heavy molasses by 1.82 rupees likely, price hike in cane juice by 1.31 rupees per litre to 66.92, and of course there is a proposed increase in heavy molasses price to 56.28 rupees a litre from 49.4. The entire sugar pack, including ethanol producers such as Gulshan Poly plus equipment makers such as Praj Industries, will be in positive thread of mind. Remember, we are also 12 sessions away from the annual budget on 1st of February, and this is the right time for at least the pre-budget rally to take root. So these are the things that we are looking at in the market on this fine Thursday afternoon. And I'd like to also mention that our guests for today will be Mr. Devan Choksi, MD DR Choksi FinServ Private, and of course Mr. Rudra Murthy, Research Head at Vajna Securities. This is just a good time as any to look at the performance of Reliance Industries, Infosys and Axis Bank in this expiry, which is now about 15 days old. So look at the chart of Reliance, and what you will see is a base building process that is happening over a very long period of time. The stock has consolidated around this 1220, 1250 zone, and is up 2.2% so far in the January expiry. Let's look at Axis Bank. This has been a disappointing stock in the month of Jan. It's down 5% since the beginning of January expiry to about 1029. And let's look at Infosys. This has been a cornerstone for supporting the Nifty and also the Nifty IT over a period of time. Infosys is up 1.8% so far in this January expiry. So this is the theme that is running in the broader market so far. Joining us today is Mr. Devan Choksi. Namaste Devan bhai, and a very warm welcome. After many days and weeks, we have a positive aura on Indian equities. Lots of positives emerging. Do you think the worst is over? What do you think about sentiment today?
Well, like many of us, I think I'm expecting that the panic bottom has been, I think, in making, or I think it is already been formed on Monday. Close to the figure of 23,000, I think, which Nifty touched on Monday. Possibly, at least in this particular near term, the panic bottom has already been created. maybe from here on, you will be seeing the recovery in the market. Fortunately, the corporate fundamentals remains absolutely intact, and that is the positive thing that one can talk about, including the IT companies which talk about the new order pipeline and the amount of new orders that they have been receiving. With optimism, that is also, I think, giving a good amount of indication of way forward. Unfortunately, in the entire process, the currency misbehaved largely because of the strengthening of the dollar, which, in my viewpoint, I think is expected to cool down. Dollar index at 110.11 is possibly, I think, facing a good resistance, so it will cool down. And should the currency get adjusted back to sub 85 levels eventually, I think that would possibly mean that the confidence of the global investors will once again be back in the market. Corporate fundamentals remain absolutely intact. In my viewpoint, I think the interest rate reduction, which the RBI is supposed to make in February, hope they are not delaying any further. In my viewpoint, I think that would be the signal for market to turn around for good. So let's keep one thing at a time. Maybe I think we are counting each and every possibilities for market to turn around. Valuation wise, Nifty 50 is quoting below 20 times price earning ratio on FY26 earning estimate basis. Given that situation, that whenever the Nifty 50 has quoted below 20 times price earning ratio, the markets have recovered, they have stabilized and they've recovered and then they moved up. So if my analysis goes right, then somewhere in FY20 calendar year 25 and calendar year 26, we are expected to see the market recovering and crossing 26,200 eventually in this particular period. So let's see how exactly it pans out, but we remain distinctly positive, at least on selective basis in individual stocks.
Yeah. There were two other important developments. Let me just first deal with the major one. You have always exuded positivity at a time when there is dire pain on Dalal Street, and you've always advised caution when things have overblown themselves. What is your view on the third quarter of Reliance Industries earnings that will be reported after market hours today? What are the pluses that you're looking for, and what could be pitfalls?
Yes, I think fortunately the turnaround is in refining business from second quarter. Third quarter is going to be a turnaround quarter for refining business, largely because of the fact that the crude oil prices remain stable. GRM remain, I think, stable during this particular quarter. Of course, in January, the fall in GRM has taken place, but it may be temporary. Leave that aside for a while. Third quarter results, I think the GRMs are likely to be positive. Should that be the inclusion into the refining margin? Answer is yes. At the same time, petrochemical polymer business, I think, has been stable. So I think the industrial vertical, which is refining and the petrochemical segment, is by and large going to provide the better numbers than quarter two numbers for Reliance in the third quarter. The exploration business continues to produce at a higher rate of growth in the oil as well as the gas exploration. So from that perspective, we are likely to see continued growth on a quarter-over-quarter basis as far as the oil exploration business is concerned. Coming to two main important consumer-facing businesses, Geo Platform and the Reliance Retail. We will talk Reliance Retail first because Reliance Retail, they've done significantly large amount of adjustments in form of knocking out those stores which have not been contributing well. So they have taken some of the bold decisions, shut down some of the stores, brought down the cost, and at the same time, I think created the SKU engineering through which the high margin product, the premium products have come in forefront, which has started giving them better margins. So along with, I think, their own products basket, which they have created, this is a segment, I think, which is likely to show better profit margin as far as retail is concerned. Same is the situation with Geo Platform, where the low-end customers in the mobile telephony have come down, but at the same time, enterprise customers and the home customers have added. So again, I think this particular vertical is expected to produce better results in the third quarter. So overall, Reliance should be a turnaround as far as I think the third quarter results are concerned.
Right. And I'll request the PCI to kindly put a longer term chart of Reliance in front of us. The stock, which is India's most valued, the stock which is ranked second on the Nifty in terms of index weight, has corrected 23% from its most recent high of 1610 rupees that we saw post bonus on 5th of July. So a lot of very important developments will happen today on RIL, and it has, as I have been saying over the last fortnight or so, been singularly responsible for keeping the Nifty in good shape. Had it not been for Reliance, you would have seen Nifty well below 22,000. With that background in mind, Devan bhai, let's also address this Hindenburg issue. Again, you have over the last 2.5 years always said that this is something that we should sort of keep in abeyance, and now news comes that Hindenburg is pulling down shutters. Just for the sake of sentiment, do you think that Adani Group shares now offer a very, very good value for long term investors? If yes, which are the 2 or 3 favorite ones?
So, Shail, I think outgoing US President awarding to George Soros in first place. Thereafter, Hindenburg closing down their shop before the president quits the office. And now the president is going to quit the office by the end of this week. I read in between the lines a message. It cannot be a coincidence. Something very seriously happened in US politics, I think, which is unfortunate. I think the viewers get the message out of it. As far as the Adani stocks are concerned, I have always maintained one thing, that they reflect the India infrastructure story. If they have created India infrastructure, which is giving India an edge, like how Reliance has created in the data network, the Geo platform, and given India an edge, I think, through the internet provided to masses, I think, at a cheaper cost, cheapest in the world. Similarly, Adani has been putting the on-ground infrastructure, be it in the area of road, airports, power, distribution, oil and gas. In my viewpoint, and ports, in my viewpoint, I think this infrastructure is a 50-year India story going forward. And they are continuously building this particular infrastructure. At the same time, the financial, the doubt people have created, they have been misfounded. The group level 80,000 crore plus EBITDA on a yearly basis on a debt of around 2,40,000 crore is not at all expensive. Many countries of the world probably, I think, are much more expensive than this infrastructure cost that these companies pay. So in my viewpoint, I think the re-rating on Adani Group of stock definitely is there. We like Adani Enterprise, we like Adani Port, and we like Adani Energy Solutions in the order of priority. Largely because of the fact that I think each of them have got some significant mode to talk about, significant amount of growth program to talk about, and we believe that I think this growth program is absolutely intact and getting unfolded. Of course, I think these companies are also having a good amount of financial discipline as far as I think they're borrowing implementation projects concerned.
Right. Devan bhai, let me just enjoy this very strong bounce that is coming on the Nifty. And like I said, you are also a lucky mascot for so many years. It's a very nice bounce, ladies and gentlemen. We have a 218 point uptick on the Nifty, and it's clicking and clicking well, and it's getting better and better. Let me just read out the prices to you. We have a strong bounce across the board in the top index heaviest weighted counters, and what you see in front of you is Reliance, and more importantly, let me just mark the entire Adani group of shares that are right there in front of you. Across the board, it's 10%. Adani Enterprises 10% higher, 26.26. Adani Green 10% higher, 11.38. Adani Total Gas is also in the green, but look at Energy Solutions. Adani Energy Solutions is also up about 10%. A 5% uptick in Adani Power at 578. This is what I see as far as the most important cluster is concerned. Now we look at the Nifty 100, and we will look at how prices are moving here in terms of percentage change. Okay, Adani's I have marked. HDFC Life, the earnings came late afternoon, post market hours, 6% higher. BEL 2.6% higher at 275. SBI Life 2.5% higher. So it's coming out to be a very nice uptick as far as markets are concerned. A 200-point gain on the Nifty. We've taken out 23,400 in favor of bulls. You also have, ladies and gentlemen, the weekly expiry today. Now this gap up, if it sustains for the first 15 minutes, you will see a very strong bout of short covering coming in, and possibly you will have a very strong move. Let's also look at some other indices where you are seeing strength. Let's look at the FNO pack and find out what are the top performers there apart from the Adani group. You have okay, Ambuja Cement is up 5%, ACC is up 5%, KPIT Tech 1.8% higher, Dixon Technologies is recovering 2.7% higher, Zomato and of course Paytm. Research reports coming in on this one, and these two should also move for the better. That's the tone and structure of the markets, ladies and gentlemen, on weekly expiry day. Let's get Devan Bhai back into the conversation. Devan Bhai, a strong move on Zomato, Swiggy and Paytm after a serious bout of profit booking. Are these levels which you would recommend to get back into, or are you still circumspect?
No, Shail, as I have always maintained, the consumer, I like Zomato and Swiggy goods, and the consumer tech that they have provided, I think is phenomenal boon to the consumers, undoubtedly. When it comes to current valuation and buying the stocks at the price at which I think they are quoting, I feel they are quite expensive. Even though they have moved in form of a higher number of, I think, transactions in the delivery, still combined companies put together, Zomato and Swiggy, put together, I think putting it somewhere around close to 3.5 lakh, 4 lakh crore kind of market capitalization, on which I think the combined profit is not there, because Zomato, of course, I think has started making positive contribution, but Swiggy is still far away. So in my viewpoint, I guess I think even if one expected they will be in profits, still I think the valuation speaks out everything. The price has got everything built into it. I don't think that one can possibly venture out into this particular buying of the stocks, unless I think you are a trader in a momentum driven activity in which you are. But investors, definitely they are expensive.
Okay, fair point. That's the view that is coming in from Devan Bhai on the three top performers as far as the internet space is concerned. A view that you would have on Policy Bazaar, Devan Bhai, also a very sharp correction but an equally strong bounce back yesterday.
Maybe the bounce back is justified because I think the underlying holding by the those investors, I think, would demand that they protect their revenue. So the bounce back is justified to an extent. But again, the same proposition, a good fintech platform serving a lot of solutions, but at the same time, everything is in price. Current market capitalization and the price is the profit. I don't think that I think there is an immediate window available for me to buy this stock because the valuation is already reached as peak level. If one has to buy them, I think definitely a sharp corrected price I think is a better opportunity. But as of now, we stay away from them.
Okay, Devan Bhai, just a couple of stocks that I'll mark in the sugar space. Remember, ladies and gentlemen, there is a cabinet meeting at 10:30 a.m. today to discuss the proposed rise in ethanol pricing as also cane prices. Now look at how Praj Industries is up 6%, 784. Triveni Sugar, 21 rupees higher, 419.75. You have Balrampur Chini 5% higher, 514. And across the board, you will see sugar in the green. Remember, this is a beaten down sector. We track 25 sugar stocks for you. At least 22 are in the green. A quick look at the PSU segment. The Nifty is still 164 up and at 23,337. Okay. Punjab and Sindh Bank up 8%. RVNL up 5.3%. Ircon up 2.6%. Oil India up 3.2%. So it's a nice bounce that we are looking forward to. Devan Bhai, your favorite pick in the PSU basket ahead of the budget?
I believe that I think public sector banks probably the roadmap may be announced in the budget for further consolidation. They have done consolidation in public sector banks, and some of the smaller banks have been folded into the larger ones. Now the time has come that even further consolidation takes place because the earlier consolidation has been absorbed in the books of these PSBs. Unless you create the, like my thesis is that unless you create the larger size of PSBs, I think you are not going to have the growth attained it because of the economy requires them. So in my viewpoint, I think the budget possibly can give this direction in form of further consolidation of public sector bank, and that could be one story that one would like to follow. Though I'm not too sure how much I think the price is because of that move may happen. Maybe I think the announcement could lead to some amount of price improvement or some amount of re-rating. We'll have to wait and see. But that's the area which I feel that I think one can easily look for. Rest of the companies in PSUs, they are good, but they are adequately priced. They have corrected 30-40%. Still, I believe that they are adequately priced. I think we'll have to wait for at least time correction, if not the price corrections.
Okay, let's pay attention to some of the opening quotes that we are now seeing. The Sensex, the Nifty has settled 164 points higher, 23,380. There is a 330 point uptick on Nifty Bank, a 300 point uptick on Nifty IT, and more importantly, ladies and gentlemen, the NSE 500, the broadest measure, is opening almost 0.85% higher. This is better than the percentage rise on the Nifty. It essentially means that the risk on trade is back in the market. We track 10 index super heavyweights very closely. All 10 are in the green. Let's look at the earnings boy today. Reliance, 6 rupees 70 higher. Infosys, 16 rupees 30 higher. Axis Bank, 7 rupees higher. The Adani Group, all of them are up, all 10 of them in top form, led by 7% rise on Adani Green, 6.5% rise on Adani Power. Adani Total and Adani Energy Solutions are 5% higher. ACC and Ambuja are about 3 and 4% higher. So the initial start to the market is going to be phenomenal. Let's hope that after the first 15 minutes, the Nifty appreciates from the high of 15 minutes. Then you will see a very strong bout of short covering. And of course, let's hope that selling pressure does not come in at higher levels. Remember, today is also the weekly expiry of the Nifty. Devanbhai, we've discussed many stocks, but anything that you have added for your clients over the last 1 week or so?
Two stocks in particular with the same disclosure that we have investment interest in these companies. The Tata Technologies and Bajaj Housing Finance. These two companies during the fall we have been adding into the portfolios, largely because of the fact that I think we believe that these two companies in their respective areas are having significantly large moat to talk about. Tata Technology is catering to the entire value chain activity in the automobile space and now also significantly in the aviation space. And Bajaj Housing Finance in particular, I think is the one which is basically growing at a higher rate of growth compared to the industry peers in EMI-based lending. At the same time, I think the three other verticals, the lease-led discounting, the loan against property, and the developer finance, each of these three verticals producing higher return as far as NIM is concerned. So we like this company at a corrected valuations. I think the post-listing, it reached to as high as 180 plus levels, and today I think it is just close to 110 levels. So definitely, I think this company looks relatively more interesting from investment perspective. We believe that 25-30% kind of a CAGR growth in the lending book is distinctly possible for this company. So that is another point I think which we like, and of course, management strength in both these companies.
Ladies and gentlemen, these are two stocks that were also talked about by Mr. Sharad Awasthi yesterday. He's also a very well-known stock picker on the value side. He specializes in buying quality available at a reasonable price. Please also consult an independent financial advisor if you think Tata Technologies and Bajaj Housing should be a part of your long-term portfolio. Remember, these are quality stocks that have corrected substantially from their recent highs and offer possibly a medium-term entry point for people who want to create long-term wealth. Again, please consult an independent financial advisor. Now let's look at sugar stocks which are doing fairly well. You have Dhampur Sugar trying to open 7% higher, 155. Praj Industries 6% higher, Triveni 5.4. Awadh Sugar 4% higher, 455. Dwarikesh Mawana Sugar, all of them are up between 2.5%, 3%. Defense space, it should be in action again. You have Garden Reach 3% higher, Cochin Shipyard 2.4% higher, BEL, Zentech, and HAL in the green. Devan bhai, what is your view, house view on defense? Do you think that the correction is now enough, or is there more to be had? What would be your top pick and the price band?
Yeah, the selective companies, the correction has been quite sharp, and I always say that I think though they are expensive, they have a good visibility as far as the next 5 years of roadmap is concerned. Most of the defense companies, because the government of India is releasing significantly large amount of Make in India program orders. So certainly these companies are having visibility for next 5 years. That is a positive thing. The price correction has been sharp, 30, 40, 50% kind of a correction has happened in respective stocks. So which is fundamentally very positive that I think this correction is giving opportunity to buy. In my viewpoint, I think still the time correction is required to be completed because the stocks moved up in a hurry compared to their earning outlook on the next 2 years earning. So maybe some time correction would be equally better if these stocks are available at lower price, I think for a little longer period of time. Among the lot, we continue to hold investment in solar industries, which is mainly the exclusive segment and at the same time providing the significantly large amount of war and weapons, I think, and also among them, I think, drones now, are the product lines which they are probably working on and they are providing to India defense. So we like this company from long-term investment perspective. Rest of the companies may be good, but I think at the same time, one will have to buy after the time correction sets in. That's what I believe.
Okay, and let's get to the markets. They've opened with a 128 bounce on the Nifty. I am focused on earnings, boys, today. What is Reliance doing? Reliance is 3 rupees 20 higher, 12.55. How about Infosys? 10 rupees higher, 1960. What about Axis Bank? 7.5 rupees higher, 1034. Now let's get to the high beta counter. Across the board, green on Adani. Adani green is 6% higher, 1095. Let's look at Adani Power. This is the highest beta stock over the last 3 days, now running for the third day in a row in the green, 583. Remember, it was less than 470 3 days ago. So the bounce back continues, and this is the reversion to the mean as far as prices are concerned. A quick look at sugar. This is news driven, and Dhampur Sugar is up 6.2%. Let's look at the big boys, which is Bajaj Hindustan, my apologies, Balrampur Chini and Triveni. Triveni is up 3%, 410. Balrampur Chini is 2.7% higher, 505. The broader markets are in top shape, ladies and gentlemen. The advanced decline ratio is 1840 versus 232. So that's an easy 8:1. For every one share that is down, 8 are up. And remember, it's been a long time since we've seen this quality of advanced decline ratio. Out of the 19 indices business today tracks, 18 are in the green. The Nifty PSU banking basket is off the block with a 2 percentage point gain. It's looking good. Bank Nifty up 500 points. Nifty 500 index up 200 points. Nifty IT up 0.88%. Devan bhai, you couldn't be happier. Okay, we are now joined by Mr. Rudra Murthy, Research Head at Vajna Investments. Namaste, Rudraji. A very warm welcome to you. Has the sentiment improved for the better on Dalal Street? What are your views from now on?
Very good morning and thanks for having me in the show. Yes, definitely we are seeing this respite in market, and from very oversold zones we are seeing this short covering bounce. Earlier all the short covering bounce was more or less only on an intraday basis, and every pullback was getting sold into. And majorly if you see, for me one data point which was very crucial was the FIIs who were continuously selling. And once you see FIIs buying in cash market at least for 2 consecutive days, one can definitely conclude and say that yes, more or less we are near the short term bottom at least. And we have to also see macro level factors, whether it is the rupee depreciating versus the dollar, and whether you see GDP, inflation data, and even the budget which is just coming up. And I want to see some reforms to come out from government which has been more or less silent for a longer term right now. So these both technical as well as fundamental factors are very, very crucial. But for me, today's move, whatever we are seeing technically on chart, it is definitely breaking out beyond 23,300. So if Nifty today closes above 23,300, that means this gap up of about 100 points what you are seeing, I want that to be stayed even till the close. So if we see today Nifty closing above this 23,300 crucial level, that confirms that yes, number one, more short covering will come. Number two, there will be more amount of fresh buying also, and lot of people waiting on the sidelines will now enter market seeing good amount of margin of safety at current market price, where valuation was a concern earlier. Right now when market fell, left, right, center, every stock, even the quality stocks with great numbers, they also got painted with the same brush and they got corrected. So for me, yes, these are times where we have to enter into good stocks, stay still with value than going with growth and momentum at current market environment and at current market price. And also you have to see how the result season will pan out, which is very, very important.
Right. Mr. Murthy, would you name maybe one or two stocks where you would suggest a medium-term entry based on charts and based on fundamental strength?
Definitely, yes. Shailendra, for me, Bajaj Finance is one stock which has been relatively very, very strong. And for me, at current levels of even 7,200, 7,000 levels, it's a great buy. So for me, Bajaj Finance is a buy at current market price. Keep a 200 rupee kind of a stop loss at around 7,000 and look at targets of 7,800 or even 8,000 to come on Bajaj Finance. That is my first top pick. Second stock which I like, and even today results are expected from Reliance. Reliance no doubt has corrected over 30% from its peak. But however, at levels closer to 1,200, it definitely offers a great buying opportunity. So for me, Reliance is a great buy. At current levels of 1,250, I will be a buyer in Reliance. Keep a stop loss of around 1,210 and look at targets of around 1,400, 1,500 to come on Reliance. So for me, two top picks, both based on fundamental, technical, as well as current market price where it is. So for me, the risk reward is very, very favorable to go long both on Bajaj Finance and on Reliance.
Fine. Let's now look at the market. Amongst the top traded counters, out of the top 4, 3 are Adani Group. Adani Power is up 5.8, Adani Enterprises is up 5.5, and Adani Green is up 5.9%. Earnings led, HDFC Life is having a 7.5% bounce and is at 640. There is a strong move coming into Oracle Financial Services. This is also earnings led, 1.3% higher. Brokerage reports have shown faith again in Zomato and Paytm. Both of them are up smartly, 4% higher and 5% higher respectively. Mr. Rudramurthy, amongst the technical charts that you see for the Adani Group, any one or two stocks where you feel there is value to be had and that medium term charts have improved?
See, for me, Adani group of stocks, no doubt, keeping in mind their growth, their future trajectory. Earlier, they were only focusing more to be number one in India. Now they are moving into number one in the world is their vision, which is very good. But for me, quality at what price is very, very important, and also quality at what volatility. Are you able to digest those kinds of big moves? If yes, then I would advocate you to go into Adani in general. But however, definitely there is quality. But if you can get it at reasonable price, at least that will be a great opportunity to enter into Adani group of stock. And for me, two stocks from Adani group of stock which will be there top in terms of valuation as well as fundamental will be Adani Port and Adani Enterprises. So for me, Adani Port at current market price of around 1165, yes, you can enter into this stock. Keep a stop loss of just 100 points below the current market price, which is at around 1050, 1060 level, and look at higher targets to come at around 1450 to 1500. So Adani Port will be my first choice if you force me to buy a stock from Adani Group, and the second one will be Adani Enterprises undoubtedly. And yes, again, this stock has seen already good correction from the peak, and from levels closer to that 3600, 3700 zone, we have seen it coming to levels closer to this 2300, 2400 zone. Yes, at current market price and on dips to levels closer to 2250, 2300, that will be a great margin of safety for me to enter at 2250 or even 2300 zone. So if you are buying at current market price, buy 25% or 30%, and the rest keep buying it on dips. By chance, if you don't get that price of 2300, nothing to worry, you would have added 25-30% of your desired stock at current market price. Right. And yes, you can buy it with a stop loss of around 2100. I'm giving bit deeper stop loss, but then this is a positional long call, and one can look at targets of around 3200 to 3400 to come on Adani Enterprises. Yes, if you have to pick Adani group of stock, it will be Adani Port and Adani Enterprises.
Okay, ladies and gentlemen, let's now take a detour into the market. The first 10 minutes of trade have happened. Let's look at what the NSE 500 is throwing at us. Okay, earnings boys, L&T Technologies and HDFC Life are in top 4, up 9.6 and 8.75% respectively. Mr. Murthy, I'll request you to keep the chart of HDFC Life ready. You have a strong move coming into Paytm, 5.5% higher. Remember, these stocks have corrected sharply. Now, what else is clicking in the green that I'd like to mark? KFin Technologies. This is a very high beta counter from the wealth management mutual fund stock market space. 1308, 5% higher. Coforge and Samman Capital, about 3 and 4% up respectively. Lot of stocks are showing signs of very, very smart gains in the first 5-7 minutes of trade. Let's look at volume busters. Now, these are stocks where in the first of trade, the previous 5-day average volume has been taken out with a rise in price. This is a very, very important technical indicator. You have L&T Technology Services, 8% higher, about 440,000 shares have been traded. It's 2.8 times the 5-day average. Oracle Financial Services, 1.5 times the 5-day average. Ceat, terrible set of numbers. The management will be joining us shortly. 7% lower, 2850, huge volumes, 100% has been traded. And of course, the Adani Group, Adani Enterprises, Adani Power, Adani Green, all of them are showing more than 50% volume traded over the past 5 trading sessions. A burst on BSE. Now heading towards 6,000, a fresh record high. But let's tackle HDFC Life first. Very strong set of earnings coming in, and this has been a long term underperformer. Any hope on HDFC Life's shares, sir?
Shailendra, what is very important, and our viewers have to catch this crucial point, positioning of the stock before the result is very, very important. And a classic example for this I can tell you is this HDFC Life. So look at that great numbers, but even more important than the great numbers are, how is this stock positioned before the result? Yes, from levels of around 750, stock had already made a correction to levels of around 585. and that has been a deep correction in the stock, and there was nothing expected, at least in terms of price. The results were not expected to be spectacular. So market expectation versus what came actual is very, very important for short term price move, and that is where HDFC Life is giving this big bounce from those highly oversold zone and from those pre-positioning which was definitely more or less neutral or negative. Nothing positive was there in the pre-positioning of the stock before the result, and that is the reason why from those highly oversold levels of around 580, this actual great results has given that big up move in the price. And yes, any dip in current market price to levels of even around 630, 635, or even at current market price, I will still be a buyer in HDFC Life. Lot of short covering has to happen in the stock, and because of deep correction in the price, you have to even see lot of fresh buying happening post this kind of a strong result. So HDFC Life is a clear buy, looking at targets of around 690 to come for very short term. Stock available even in F&O, and if it crosses 690, yes, stock can go even up to 740, 750 level. So I will keep a tight stop loss of today's day low and look at these targets on HDFC Life.
Right, sir.
So buy on every dips for this stock.
Right. Let's also look at where action is coming in the F&O space. For the moment, it's a very strong advanced decline ratio that we are looking at even in the F&O space. 203 futures are in the green versus just 22 in the red. So that's an easy 9:1 definitely. Now, what is in top form? When you look at prices in the Jan expiry, for the moment, the rally is led by L&T Technologies, HDFC Life. What else is moving in strength? Paytm 6% higher, Adani Greens 5.4% higher. This is how it is as far as gainers are concerned. Profit booking in Trent, which continues unabated, 1.8% lower. The future is now at almost 6,300. Divi's Lab, Tata Consumer, CESE, all of them in the red and minorly so. Okay, there is a sharp increase in volume on HDFC Life, which we've marked. The top traded counter today is, surprise, Oracle Financial Services, HDFC Life, and L&T Technologies. So these are all earnings-led stories which are now getting established in the market. Zomato is in top shape, 3.5% higher. Paytm 6.5% higher, and I see lots of former favorites coming back into the market. Anantraj 1.8% higher, 912. You have Medanta Hospital 1.3% higher, 1037. The first 15 minutes have lapsed on the Nifty. Now let's look at the high. The high for today was 23,390, almost 23,400, where the call writer got active. Remember, today is also the weekly expiry. What is the low? The low is 23,320, and we are now at 23,340. So, will this low be tested? Maybe yes, and then what happens will be interesting. So, we have to break out of 23,400 if the short covering has to gain strength, and we have to be very cautious about 23,320. If it breaks, well, then the gap will be filled. Now let's look at the stocks that are contributing to Nifty's gap up. ICICI Bank 24 points, SBI 17 points, HDFC Life 13 points, HDFC Bank 12 points, and Adani Ports 9 points. What is pulling the Nifty down? These are stocks that I would not be worried about at all. They have very, very low weightage. TCS, ITC, Hindustan Unilever, Divi's Lab, and Tata Consumers, anywhere between 5 and 2%. So overall thread in the market is positive. The advanced decline ratio is now getting better. 2045 shares are in the green versus 214. Now this is an easy 10:1. Gainers, Nifty PSU Banking Index 3% higher, all 12 stocks in the green. Realty Index, all 10 stocks in the green. Nifty Next 50 48 out of 50 stocks are in the green. So across the board, there is a fresh move that is coming in. Anything that Mr. Rudramurthy, you are watching on the charts which might merit attention?
Yeah, Shailendra, because of this good results of HDFC Life, I'm seeing that spillover effect to SBI Life also. For me, again, fundamentally, it's a very, very strong stock which has seen enough correction from the peak. And SBI Life for me is also seeing that 3.5% kind of a gain. And it is also bouncing back from that crucial support zone of around 1380, 1400. And positionally for me, if today SBI Life crosses that level of 1525 and closes above that, it gives me a strong buy signal, and lot of short covering is yet to happen in SBI Life, and fresh buying will also spill over because of positive results from the same sector, that is from HDFC Life also. So for me, yes, SBI Life is a good buy. I am looking at higher targets of around 1630 to come on SBI Life. So at current market price, I will buy for a 100 rupee kind of a target from here on for a good positional trade, and just keep a tight stop loss of about 20 points from current market price. So 1:5 kind of a risk reward buy on SBI Life from current market price.
Fair point. Let's look at the erstwhile market favorites. Everything is now buzzing and is back. If you look at the PSU basket, now look at IRCON, look at HUDCO, look at RailTel, IRFC and RVNL. All of them are showing very strong gains as far as markets are concerned, and the entire PSU basket is now buzzing with life on the long side. Let's get Mr. Rudramurthy into the conversation. A view on RVNL, 9%, 8% higher, and a view on IRCON, 6% higher. Both these stocks, ladies and gentlemen, have corrected 20-25% from their most recent peak, and because of the budget session now being 12 days away, you will now see a very strong uptick, hopefully. Rudramurthy ji, RVNL and IRCON, what are the charts telling you?
Shailendra, I very well remember last time when I was talking to you, I had this biggest concern on especially defense, railway stocks and shipping stocks, that yes, these are great companies, but the only concern is valuation, and valuation had gone to such an exorbitant level, they were trading much more higher than private companies. Public sector undertakings generally have a lower valuation only in terms of their way of working compared to the private lot, but undoubtedly these stocks had already made a big move. And name whether it is PFC, REC, BHEL, BEL, or go to even defense stocks like HAL, BEL, or look at even shipping, or look at even railway, they had all done excellent, but their valuations at the peak was a big concern, which I was repeatedly telling. But right now, look at these two stocks, IRCON as well as RVNL, which you are asking. From the peak of 350, IRCON came down as low as even to levels closer to 185. And this 150 rupee correction from the peak, if you calculate, that is more or less 40-50% correction in IRCON. And yes, at current market price, they are definitely a great buy. So what is important is whether IRCON buying at 350, do you have margin of safety? And the same stock now available at 185 to 200, do you have margin of safety? So for me, yes, IRCON is a buy at current market price. I will keep a stop loss of 180 and look at initial first target of around 230, 235. And if it breaks 235, then yes, a sustained move on the upside can be seen to levels closer to 260, 265. So if you are a very short-term trader, if you are buying at current market price, keep a target of around 235 as I told you now, and then above that you can look at 260, 265 on IRCON, and stop loss at around 180 is a must, which is the recent low. Look at RVNL again. This stock from levels closer to 630, 640, it corrected to as low as 350 to 360. So again, this stock has already corrected 50%. Definitely a great buy. RVNL at current market price of around 400, I will buy it with a stop loss of 350, and it's a 50 rupees stop loss from current market price. Look at initial target of 480 to come if you are a short-term trader, then 530. And yes, for me, these two are very, very mouth-watering buys at current market price, and keep those stop losses, whatever I have told, and it's a good buy at current market price.
Right. Let's now dip into what the best stocks are doing in terms of maximum percentage gain. We've discussed HDFC Life and RVNL. HDFC Life has now shot up 9%. Remember, it is still below its 200-day moving average. Therefore, it provides value. What else is moving apart from the railway space? Look at Magad Sugar, 6.9% higher, 601. Look at Punjab and Sindh Bank, 5% higher, 48.8. The rest of the stocks are either sugar or the Adani group, which we've already discussed in terms of gain, or of course railway stocks. So this is how the setup is amongst top traded. Aeroflex Industries is 13% higher on very sharp volume. 211 is what you see in terms of price, and this is also running up on fairly sharp volume. What else would I like to mark? Let's take a view on L&T Technology Services from Mr. Rudramurthy. What you see is a price around 200-day DMA, 8% higher at 52.45. Mr. Murthy, what are the charts of L&T Technology Services telling you?
See, for me, two stocks from IT which looks good is one Coforge and then this L&T Technology Service. Today's volume action just within about not even half an hour from the trade start is very positive. No doubt results were very good. That is one of the fundamental reason why LTTS is making this big up move. For me, today close is very important, and if we see any close above levels of 5200, that tells to me that more buying will happen in this counter. So for me, LTTS at levels closer to that 5200, one can definitely look at buying, and you can keep a stop loss of around 5100, and my first target on LTTS will be around 5550. So for a target of 5550, buy at current market price, and on dips to 5200, keep a stop loss of 5100 and look at the target of 5550 to come on L&T Technology.
Okay, ladies and gentlemen, 9:41 now, and we are headed towards a fairly strong broader market. The Nifty perhaps is testing 23,320. Let's look at what the chart of the Nifty is saying. Okay, it's below the second resistance, and of course much above the first one. But the low for today is 23,315. Let us see what happens around that. We are mostly close to where it is. But the broader markets are in top shape. Anything which is earnings led, broker led, Adani group led, railway led is showing very strong traction and doing fairly well. BSE will today possibly see a change in digit. This is a stock which is up for the fourth day in a row and is now at a record high. Let's look at the stocks that are hitting fresh highs in trade today. BSE is the only one in NSE 500. Mr. Rudramurthy, your view on this one. Today 59.50. Would you chase the momentum on the long side?
See, Shailander, it all depends on what is the time frame and what kind of a trader you are. If you are looking for risk reward and you are having slightly a higher positional kind of a time frame, I will not recommend you to chase and buy BSE at current market price, but definitely it's a great stock to own. But the main question is at what price you want to enter it into. So if you see the chart, it has given a breakout above levels of 5,840, which was an immediate resistance which was earlier there before the today's price move. So for me, any dips to that levels of 5,850, 5,800, and whenever market corrects overall, all stocks more or less will go through the tide and they will also correct. So enter BSE at levels closer to 5,850, 5,800. Have it in your portfolio. This stock, I won't be surprised if it goes even to 5 digit, which is 10,000 plus. Also fundamentally, if you see the changes which the regulators have bought because of SEBI increasing the lot size, making these weekly expiries move out and then only one expiry per month and all that stuff, whatever has happened, has made BSE in terms of business much better, which is positive for BSE and negative for NSE, and that is making the price move which is happening in BSE at whatever you see. And last 4 days it has given a relentless rise from levels of around 5,000. The stock is now at around 6,000 in last 4 trading session. It is a 20% kind of a 1,000 rupee kind of a move in BSE, and this stock, whatever it is currently there, still it is worth buying, but chase it only closer to that levels of 5,800, 850, so that you have some risk reward. Or you want to buy it at current market price, don't buy all your quantity, buy some small portion of your quantity and buy it on depth. But definitely a great stock to own. And very quickly I want to also tell you, don't compare BSE with other stocks like whether it is Kalyan Jeweler, Paytm. These are all stocks which made a big momentum move. But do I have that fundamental backing to Kalyan Jeweler or for Paytm for that matter compared to that of, let us say, BSE? And Paytm, even after the move from 250, 300 zone to current market price, whatever it is, look at the IPO price where it was valued. From there, even currently it is down over 50%. So for me, what is important is when you chase momentum, look at also quality of the stock. BSE, you are chasing momentum, but quality of the stock is great. But I can't give the same quality for comparing BSE with that of, let us say, either a Paytm or a Kalyan Jeweler. This is where retail people has to get the basic understanding, education
Right, sir.
through great programs like this.
Let's now shift focus. The first half an hour has lapsed, and the Nifty is testing its intraday low 115. The Bank Nifty is up 500 points. This is something which is interesting. There are stocks such as Laurus Labs, which are now bouncing off day's low. 568 actually weekly low. You have a strong move that is coming into Naukri. Remember, till about 3 weeks ago it had crossed 9,000 rupees to hit a record high, and we are now up 4% on Naukri, 7758. These are quality stocks that are showing signs of a very strong bounce back. What we'll also do is we'll dip into the FNO space and find out the top OI gainers in terms of price as well. That will give you an idea where built up is happening in terms of open interest and price. We've discussed L&T Technology Services, HDFC Life. The next counter is Policy Bazaar, 4% higher, 1834. Mr. Rudramurthy, I am requesting your view on Policy Bazaar. This is a stock which is now making a bounce from 200-day DMA up for a third day in a row, and the most recent high was 2249. What are the charts telling you? I am requesting you to be please be precise.
See, for me, the strong support for Policy Bazaar is around 1,600. So if you want to buy at current market price and if you are a short-term trader, keep a very tight stop loss at around 1,680 and buy at current market price. Look at targets of around 1,950 to 2,000 to come on Policy Bazaar. But if you are a positional trader, the strong support zone is at around 1,600.
Fair point. We have now movement coming in onto BSE again. As I have pointed out, you will see a change in digit. We will see BSE beyond 6,000 today. Within the internet space, Nykaa 1.5% higher, 175. We've marked Paytm, we've marked Policy Bazaar, and of course the two big ones, Zomato and Swiggy. A nice brokerage report coming back on Zomato after the stock has corrected sharply over the last 1 week or so, and 2 days of bounce back. Mr. Murthy, your view on Zomato at about 250. It's the third most active traded counter today, almost 474 crores traded.
Among the internet e-commerce space and lot of stocks which you named right now, Shailendar, for me Zomato is the top pick. Keep a stop loss of 225 on a closing basis. Buy at current market price. Look at target of 300. Answer cannot be shorter than this.
Yes, 305 was what we saw on 9th of December, and from then on the stock has corrected all the way down to 225, which was its 200-day moving average. This number came on 13th of Jan, a good research report, and of course buying resurfacing on the broader markets has seen Zomato go all the way up to 259. So what you see now is 249. Nevertheless, a quick one. Mr. Rudramurthy, look at MobiKwik. This was an erstwhile market favorite till about a fortnight ago. Bit of profit booking and much expected. 700 was the peak that we saw, and today at 491. I understand that price data is not much because the stock got listed on 19th December only, but given the paucity of price data, what do you think are the charts telling you?
See, for me, yes, the stock, as you said, recently after its listing, if I see the recent low post the listing, it is somewhere at around 435 or around 440. And the volume action when the price moved from those levels of 440 to levels closer to that 700 was very, very positive. So I will be a definite buyer in MobiKwik at current market price, but I will keep a strict stop loss below 440, which is about 50 rupees from current market price or around 10%. And I will look at targets of around 600 plus to come. So 1:2 kind of a risk reward, 50 rupee downside, 100 rupee upside from current market price. So yes, MobiKwik, if you have that kind of a risk reward, buy at current market price, keep a stop loss of around 440 and look at targets of 600 to come on this stock.
Okay, let's now again dip into what the broader markets are telling us, ladies and gentlemen. The Nifty is now testing its intraday lows. 23,320 is where it is. It's also its weekly expiry, but keep in mind that you have across the board a very strong rally taking root, and in fact it's getting deeper and deeper. The Nifty Bank is up 500 points, 1%. The Nifty 500, which is the broadest market index, is up 1%. That's a very, very big plus. Now let's look at the aggressive indices. Nifty Alpha 50 is up 1.8%. It has 50 shares, out of which 44 are in the green. The small cap index is up 2%. It has 100 shares, 95 are in the green. The mid cap index is up 1.6%. It has 100 shares, 93 are in the green. And of course, amongst the sectoral top performers is the Nifty PSU banking basket, 2.7% higher, 63.15. Across the board, ladies and gentlemen, there is an improvement again in advanced decline ratio. Now 2063 shares are in the green, just 223 in the red. So as time goes by today, traders who are on the aggressive side of long positions are getting strength and hope that just at least for today, you might have a nice green tick. The Nifty, because it's the weekly expiry, is showing signs of sideways to flat move. Nevertheless, it has still protected its gap up, which was of about 100 points. What is in pain? It's in the pharma index, but it's seen record highs over the last 3 months or so. So one doesn't need to be worried about. Within the PSU pack, Mr. Rudramurthy, we've discussed several railway stocks. In the banking space, would you have a favorite within the PSU basket?
It can only be one stock, Shailendar, and it is SBI. No doubt the correction was very deep in SBI and it gave wonderful opportunity for someone to buy it even for a long-term portfolio. So for me, if I consider PSU banks and your question very clear, SBI will be my top pick. It came down as low as around 720, 725 if I am not wrong. From there we have already seen a 50 rupee kind of a bounce. So might be from now here on, if you get any dips to 750, 760 zone or even at current market price, you can look at buying SBI. That will be the only top pick for me when it comes to PSU bank. And if you want to buy any other PSU stock, yes, after this correction for me, HAL looks very, very strong. Even PFC REC looks good for me at current market price. So for me, these are all stocks which I will buy. And from large cap, if you want to build a portfolio, do not miss Reliance at current market price, SBI at current market price. From banking, you have HDFC Bank and ICICI Bank. No doubt from infra, L&T is the top pick because I expect even from the budget, you will have a lot of spending on infra, and without infra, India cannot move into the higher trajectory as a country. So infra spending is a must, and L&T is available at current market price. It is a mouth-watering buy. And look at even stocks like IRCTC post the correction at around 770. It offers a great buying opportunity. So for me, start making a portfolio right now with these stocks which I have mentioned.
Okay. Let's also look at where the activity is now hotting up, and that, ladies and gentlemen, is in Goldiam International. If you were with us 4 days ago, we had Mr. Ashish Chaturmota, who's a fund manager at JM Financial, as our guest, and he had mentioned Goldiam International as one of his most recent picks. This is a jeweler which is expanding rapidly and is also in the artificial diamond space. A very strong burst today, 6.5% higher, 34 rupees up at 566. This is again something that has increased rapidly. Mr. Chaturmota was with us just a week ago when the price was 455. He had mentioned it on air, and this is something that has shone very brightly, just as a diamond shines. Mr. Murthy, would you want to comment on Goldiam International?
See, on chart, it made that breakout above levels of 450 with good volume action. So yes, this stock, if you already have, based on the recommendation which was earlier given in your show, one can definitely keep a stop loss of 450 now on a closing basis and ride this. Or if you want much more deeper stop loss from current market price, it will be at around 510. So 510 was the low it made on yesterday. So keep that as your stop loss and keep holding the stock. Trend is not positive but very positive, and ride this uptrend whatever you see in Goldiam. And one more stock very similar to this in the same sector which I can pick is Vaibhav Global, and mark the current market price, it is at around 280. And this stock, if you look at valuation and the business what they are into, very similar to this is Vaibhav Global, and this stock is yet to make the big move. I am not referring to Vaibhav Global for a very short term kind of a 20-30% kind of a move. If you are a long term investor, you can't miss this price of 280 on Vaibhav Global, and I am looking a target of 500 to come on this stock, might be in a year's time. So it's a doubler from current market price in 1 year, 100% kind of a return, safe stock in portfolio. You can definitely give 5 to 10% weightage and hold this in your portfolio for investment.
Right. With that, Mr. Rudramurthy, thank you so much for your time. And we will always remember SBI, Vaibhav Global from you as far as market picks are concerned, and of course the caution that you advised on BSE. Thank you so much, sir. 9:57, ladies and gentlemen. The first the first 40-45 minutes of trade have been good. The Nifty, as I have pointed out, is now testing its intraday lows. Let's hope 23,300 holds. Remember, it's also the weekly expiry day, but a whole host of positive data is impacting the markets very positively. Globally, you've seen a strong close on Wall Street. You've seen US 10-year yield ease a bit, the dollar index drop a bit. You've also seen a fantastic earnings performance by Goldman Sachs, by JP Morgan, by Citigroup, and by Wachovia, as also a dip in the inflation at US. All that has come at a very good time on Indian markets. We've shown a very nice and sustained bounce ever since morning. Lots of old market favorites have come back, and in particular the Adani Group, on news that its earlier tormentor, Hindenburg Research, has shut down its work. And of course, these stocks were in top shape over the last 2 or 3 trading sessions. They are doing extremely well on price and volume even today. There are signs that the pre-budget rally will take root. It's started with sugar. At 10:30 a.m. there is a union cabinet meeting which will discuss on a price hike for ethanol, for molasses, as also sugarcane. Please keep that beaten down sector in front of you. And of course, there is no stopping Bombay Stock Exchange, K Fintech, MCX. The entire wealth management space is up and clicking. This is how the structure is for the market, and we will also now shift our focus on the earnings. We will shortly be joined by the management of tire maker Ceat Limited. The chart is right there in front of you, and we will be joined by Mr. Kumar Subhaiya, who's the CFO at Ceat Limited. Let's look at the stock price of Ceat. The earnings were not up to the mark. The stock is now at 200-day DMA 2849, down about 6.7%, and this is at a multi-month low as far as prices are concerned. Sales for the quarter gone by were up 11% year on year at 3,300 crore rupees. Net profit, however, slumped 46% to 97 crores. It was both a sequential as well as year on year fall, and of course the EBITDA dipped 18% at 341 crores. We are just waiting for Mr. Subhaiya to join us, but that will be in a while. In the meantime, let's look at what the markets are telling us. A good show on Tata Technologies, 813 for you. This is something that has come twice in our conversation over the last 24 hours. Mr. Devin Choksi recommended as a long-term buy. The stock has corrected sharply from its last year's high of 1300 when it had a mega listing, and today available at around 817, 818. Remember, it was below 800 just 2 or 3 days back, so maybe some good bottom fishing that is happening. Small finance bank space is doing very well today. Look at Equitas Small Finance Bank, 72.95. Banks are in top shape. Union Bank is at 110.5. Remember, the Nifty PSQ basket is the top performing stock index for today, up 2.9%, and all the 12 stocks that comprise the Nifty PSU banking basket are in the green. Let's take a detour into the markets as well. Advanced decline remains stronger. The number that you see in front of you is 2057 stocks in the green, 242 in the red. So it's an easy 10:1. You have the Nifty testing its intraday low at 23,320. Remember, today it's the weekly expiry. Even if the Nifty flattens out, there won't be much that you could go against it, but broader markets are in top shape. The Nifty Bank aggressively moving 500 points higher, actually 545 points higher, and intraday at 49,430. Mr. Kumar Subhaiya has joined us. Namaste and a very warm welcome to you, sir. Sales for the quarter gone by jumped sharply at 3,300 crores, but a disappointment for shareholders as far as net profit is concerned. It slipped about 46-47%. Mr. Subhaiya, what went right for sales and what went wrong for profit?
It's been a good year to start this discussion on a positive note with respect to top line. Okay, and we are aiming for a double-digit kind of a growth in the year. In the quarter that went by, we grew by about 11.4% year on year, and cumulatively the first 9 months we have 9.4% is the overall growth, and healthy growth in replacement business in the international business. So therefore, satisfying quarter. Okay, we are very close to our all-time high revenue number in quarter three, marginally below quarter two. Quarter two, our revenue was the highest ever.
Yes.
So yeah, that from that point of view, satisfied and happy. Yeah, you're right on with respect to profits. Okay, the key driver for drop in margins leading to lower profits is mainly on account of continuous increase in raw material prices that we have been witnessing for last 3 to 4 quarters, led by natural rubber prices and also some of the crude derivatives. Natural rubber prices reached a 15-year high in India in the previous quarter, in August, September. So, and we have been taking price increases at regular intervals. Even in the quarter three, we took the prices of passenger car radial tires by almost about 6%, and truck and bus radial tires closer to about 2%, light commercial vehicles. And considering an increase in raw material prices was higher, and our price increases happened during the course of the quarter at different points in time. Okay, and we were not able to fully mitigate the impact of raw material prices in quarter three. However, we have more plans to increase our selling price in quarter four, and we expect raw material prices to be stable in quarter four. So when the prices not input cost prices are stable, when you take the prices of finished product, it has a positive impact on margins. So that's the way we would like to put it going into quarter four.
Right. Fair point. That's a good assessment. Let me just mark the operating margin for our viewers. For the quarter gone by, the OPM was 10% for Ceat, and as Mr. Subhaiya has very succinctly explained, it was higher raw material prices. In June quarter, the OPM was 12%. In the March quarter, it was 13%. And in the quarter gone by, which is the year ago December quarter, it was at 14%. So you've seen a slide in OPM because of higher raw material prices. And Mr. Subhaiya, we've also seen the OEM space, your main buyers such as automakers have a torrid time over the last 1 year or so. All sorts of news coming in that auto demand is down, cars are not selling, inventory is up. What has been your own interaction with the top automakers? What are they telling you? Is there a lack of models to sell to people, or are we genuinely not having higher disposable income to buy assets such as cars?
No, I think if you really look at over a 3-year period, okay, maybe OEMs are reporting some slowdown, but not all categories. Two-wheelers are showing growth, okay, and both EVs as well as normal, regular original equipment manufacturers. In between, post-COVID, there were some challenges with respect to exports. What is exports for them is actually local for us, because we supply tires locally and they export in vehicles overseas. So a two-wheeler segment, we didn't find any issues in the first 9 months. We, in fact, they had all grown. Maybe in the passenger car segment is where there are challenges. Okay, I think could be multiple reasons. As some of them you already covered. Festive season didn't go that well, leading to buildup of inventory. Okay, and also there is some preference to EV vehicle at some affordable price. So therefore, it's possible end customers are waiting for some clarity with respect to, or some better propositions with respect to EV or alternate models. But I think auto sector does go through in the cycle of 4 years, one very good year and one not so good year. I presume the current year is not is part of that one not so good year. So therefore, we look forward to OEMs getting back to normal levels. But as far as Ceat is concerned, I think we expect OEM growth to be higher in quarter four. And we had a lower growth in the previous financial year, but in the current year, going forward in quarter four and beyond that, we expect our OEM business to grow strongly as we have been approved and we have started getting orders for some new models, new launches, and things like that. So from our point of view, any slowdown on OEMs may not have any impact on our growth going into Q4 and beyond.
Right. Mr. Subbiah, let's also address the other elephant in the room, which is dumping of Chinese tires in the Indian economy. What is the extent over the year ago period? Has it abated? What is the government telling the industry in terms of trying to protect local manufacturers? Have you made a submission to the government of India, and what has been the response?
See, the core issue you would be aware is because tires are coming into India at a lower rate of duty, about 5 to 6%. There's an inverted duty structure
Yes.
kind of a problem here, whereas raw materials are subject to higher level of import duty. Natural rubber is 27%. You have anti-dumping duty, safeguard duty on synthetic rubber, carbon black from some locations, some geographies. So therefore, from industry standpoint, it is not a level playing field. Okay, either raw material prices should be closer to or lower than the duty at which the tires come into the country, or the duty on the tires will have to be higher. So largely, the issues with respect to dumping happens in the commercial category of tires. Okay, particularly say truck and bus radial tires. So there is an anti-dumping duty on imports from China.
Yeah.
But however, there are other countries in Southeast Asia where there is a free trade agreement. Okay, and while the place of manufacture could be Southeast Asia, but the ownership may be outside Southeast Asia for such manufacturing. So there are some challenges with respect to such imports, but it is not material enough at this point in time. We have not seen any significant growth in the first 9 months of the current year versus the previous year. So therefore, that has not affected incrementally in the first 9 months. But any decision to bring some parity in this will always help the Indian industry.
Right. Mr. Subbiah, we are also about 12 sessions away from the budget. Is there an expectation from the government by the tire industry to change this inverted duty structure, or maybe introduce a higher import duty to protect players such as you?
Okay, see, anti-dumping has been introduced, okay, and it got renewed recently. In the budget point of view, I think one thing that can happen on import duty on tires, I don't know whether it will be taken up in the budget or not. So that is the only way budget can have an impact. Okay, outside the budget, GST is also another area where the GST rate on tires is 28%. We are at the highest slab. Okay, so therefore,
Yes.
from that standpoint, okay, we are at a disadvantage, not versus imports, but in general with respect to cost of ownership of tires at the 28% kind of a rate. There are many other cost impact also that has impacted Indian tire industry. For example, government introduced EPR requirement, okay, whereby every tire that we produced 2 years back, okay, we have a EPR related 100% liability on it. So there are some of those incidences, cost incidences. So any decision either on the GST side or any progressive impact on EPR that the industry has taken up, okay, any other way to bring down the cost on Indian tire industry will help. Indian tire industry is also investing a lot in capacity expansion, not only to meet the Indian requirement, but also the global requirement. And tire is an important part of EVs. So where PLI benefits are offered to many auto ancillaries, but tires is not part of it. So it'll be great if any of these issues are addressed for Indian tire industry. I think it'll have a positive impact in terms of Indian tire industry to invest more and provide more employment opportunities.
Right. Two important questions, Mr. Subaya, for you. There has been, some talk in the market that Indian corporates are not investing in fresh or brownfield capex, and everything has been left on the shoulders of the government to boost the economy. At Ceat, is there any fresh capacity which is coming on stream in the current financial year, and your future plans for expansion, sir?
Okay, and what we have been investing a lot. Okay, in the current year, we expect our capex to be in the order of about 1,050 crores. Okay, in the last 5 years, we have kind of very close invested about 5,000 crores in adding capacities. We added a new tire factory in Chennai with an committed investment of 4,000 crores. We expanded our Nagpur two-wheeler tire factory by 100%. We expanded our Ambernath factory. We expanded our factory in Halol. So therefore, a lot of investments from our point of view. Even yesterday, we got enabling approval from board to expand our Nagpur two-wheeler factory. Okay, so from that standpoint, I think we are not alone. There are other tire companies in India who are also investing. Reasonable portion of this investment is for overseas requirement. In addition to that, in the tire industry, top 4 tire companies have also committed 1,000 crores for Northeast for rubber growers and things like that. So therefore, there is a less reliance on government from Indian tire industry. That will be great if we get a little more incentive for us to invest more, okay, and expand our capacity and become globally competitive.
Okay, fine, sir. And my final question, if you look at the interest payments for the quarter gone by, they stood at about 75 crores. It's both a quarterly as well as year-on-year rise by about 13%. What's the move forward on interest payments, level of debt, and how do you see that either trimming or rising?
Okay, in the quarter 3, overall, end to end, our debt moved down by about 50 crores. Okay, and so our debt
yes,
so saw some small drop. Okay, and the reason as to why finance cost has gone up in quarter 3 versus quarter 2, as well as over the same period of last year, our average debt in quarter 3 was a little higher than quarter 2. So the debt reduction happened more towards the end of the quarter. Second, banks increased their MCLR during the quarter. Okay, so that had minor impact. Third, as we commission our new facilities and capitalize assets, interest cost also impacts the profit and loss account instead of getting capitalized. These are the broad 3 reasons. Generally, we have been very responsible with respect to overall debt management point of view. Though in the previous question, I told you we almost invested about 5,000 crores of capex in the last 5-6 years. Large part of it we managed through internal accruals, and we have been responsible with respect to way we manage our debt. And our balance sheet is healthy. Okay, our leverage ratios are very healthy. Like our debt equity is under 0.5, about 0.44, and the debt EBITDA is about 1.2, which are very healthy from our standpoint. So we are investing for growth. We are investing for capacity additions, and that capacity additions is giving us top line benefit and the benefit of scale.
Right. With that, Mr. Subaya, thank you so much for your time, sir. And we hope the best for the tire industry at Ceat as well. Let's hope this inverted duty structure is addressed and domestic industry is saved from inexpensive imports. Have a nice day, sir, and Happy New Year.
Thank you very much. Lovely talking to you.
Same here, sir. That, ladies and gentlemen, was Mr. Kumar Subaya, the CFO at Ceat, where top line rose 11% for the quarter gone by, but rising raw material costs and, of course, a flat trajectory in the main auto buyers was responsible for a 47% year-on-year drop in quarterly profit. With that, the show draws to a close, ladies and gentlemen, but please remain glued on Business Today Television for the latest updates that are there in the market, and I'll be back at 2:30 p.m. for the roundup for the show. The Nifty 92 points higher, Bank Nifty 500 points higher, and of course there is this deep color of green on the Lal Street. Maybe my tie worked. Thank you so much.
The assembly elections in Delhi have created huge tremors within the opposition alliance. Aam Aadmi Party and Congress are raining fire and fury at each other non-stop.
पोल्यूशन बढ़ता जा रहा है, महंगाई बढ़ती जा रही है.